This lecture is presented by John Moffat of Open Tuition. For other free lectures, visit opentuition.com.
Okay, we're working through the June 2015 Paper F5 exam. And I'm now going to work through question 2 in section B. So as always, let's look at the requirements first. Assuming that the group's current policy could be changed, advise using suitable calculations the number of motors which Division M should supply to Division S in order to maximise group profits, and recommend the transfer price or prices at which these internal sales should take place. So let's have a read. Mob manufactures electronic mobility scooters. The company is split into two divisions, the scooter division S and the motor division M. Division M supplies electronic motors to both S and external customers. So if you've watched the free lectures on transfer pricing, you'll know that I like drawing a little diagram. It helps me remember what's going on. And it's also good for the marker. If you have misread something, at least they can see what you've misread, and you can still get some marks for proving, the idea. So where are we? Division M supplies these motors to Division S and also to external customers. The two divisions run as autonomously as possible, subject to the group's current policy that M must make internal sales first before selling outside the group. And Division S must always buy motors from Division M. However, this policy, together with the transfer price, which M charges, is currently under review. And that's what we were asked to do in the requirement. Details are given below. Division S, they need 35,000 motors. An external supplier could supply them for $800 each. So they can obviously get them from M, as they currently do, or they can buy externally. And they'd have to pay $800. Division M, they've got capacity to produce 60,000 units. And they're budgeting on selling 60,000. The selling price per unit for external sales, they'll sell for $850. And the variable or marginal cost for external sales is $770. So if they sell externally, they're making a contribution of what? 80, the difference. The variable cost per unit for motors sold to S is $30 a unit lower due to cost savings on distribution and packaging. So if they sell externally, the marginal cost is $770. If they sell to the other division, the cost will only be $740. And finally, the maximum external demand for the motors is 30,000 a year. So in total, you see, they could be selling 65,000. But they've limited capacity. They can only make 60,000. And the question is, will they sell 35 to the other division as they do currently and the rest externally? Or might it be better selling 30,000 externally and only the remainder to S, and S would have to buy the others externally? Well, let's go through. Now, I'll do it the way, effectively, I do it in the lectures. It doesn't make any difference. We need to know both the recommended transfer price and where M is better selling, how many external, how many to the other division. And because we've limited capacity, if they choose to sell to S rather than externally, then the transfer price, the minimum that they'd be prepared to charge always would be the marginal cost. Well, if they're selling to the other division, the marginal cost we had before is 740, together with any lost contribution, because every unit they sell to S is losing them a unit that they could sell externally. So the lost contribution, because they wouldn't be able to sell externally, selling price 850, the cost if they sell externally is 770, the contribution 80, and therefore for it to be better to sell to the other division, they'd have to be charging at least 820. And of course the other division, the maximum they'll pay is the external price. They're not going to pay 820 here when they can buy them externally for 800. And so what's better? You know, to make it worthwhile selling to the other division rather than external, they'd have to charge, M would have to charge 820, S wouldn't pay it. And so they prefer, it's better to sell externally. Now we're not quite there, because that would be the end of it if they could sell everything externally. You see, M is capable of making 60,000 units. If they could sell all 60,000 externally, they should. It'd be better for the group, and S should buy theirs. They should buy theirs externally at 800. However, there's one other problem. They can't sell everything externally. The maximum they can sell externally is 30,000. And as we've just said, it's better to sell externally when they can. And so, in fact, what M should do, they should sell as many as they can externally, which is what? 30,000? Excuse me. But what about the other 30,000? Well, they can sell the other 30, remember, to S. And because they're selling as many as they can externally now, they're already selling them 30. If they sell more to another 30,000, the remaining 30,000 to S, they won't be losing any contribution. There's nowhere else they could sell those 30. And so they'll sell the other 30 to the other division. And again, because they're no longer going to be losing a contribution, the minimum price they could charge, they'd only need to cover the marginal cost of 740. And of course S, the maximum they'll pay is 800. So the transfer price would have to be between 740 and 800. And both would be happy. M's happy to sell them provided it's more than 740. S is happy to buy them provided it's less than 800. And anything between the two would achieve the objectives. What about S, though? M is only prepared to sell them 30,000. We've said about the external sales already. So they will buy 30,000 from M. The transfer price, anything between 740 and 800. But they actually want, what was it, 35,000, I think? Yeah, so the remaining 5,000 they'll buy externally at 800. And there we are. So that's what's going to happen. We answer both bits now. 30,000 sold externally, 30,000 sold to S. and S, buy 30,000 internally, buy 5,000 externally. And for the ones that are transferred, the 30,000 that are transferred, the price will be between 740 and 800. So that's a nice question. Okay, that was question 2.